This is going to be a two-part series, and this is going to be a series for the beginners, or even if you are expert or trying to be an expert in order flow. Definitely, this is going to be a very strong foundational order flow series, I would say, and part two is even more exciting. Now, this series we're going to talk about the very basic foundational concepts of order flow. I mean, a little bit about me. I've been trading the markets since 2006 onwards. Around 2012 is what I got to know about order flow, and since then, market profile and order flow is one of my core foundational principles for discretionary trading. I'm also into automated trading as well, but market profile and order flow, it makes me to learn discretionary trading. And since then, I adopted market profile and order flow as one of my core foundational tactics. Until today, I've been using, experimenting, learning new things, right? And what order flow makes me is like trying to predict, avoid trying to predict the intraday markets. It helps me to observe the markets even more closer, and it helps me to react to the situations very instantly, right? Means in other words, we can call it as like predicting a short-term trend reversal with an reasonably higher winning odds. When I say reasonably higher winning odds, around 65 to 70, sometimes 65, 60 to 65, right? That's a kind of winning odds. Now, talking about order flow, right? So if you ask me what is exactly order flow, probably I would say like order flow is more of a modern day tool. More than a study, it is nowadays it is more of a tool these days, because the tool itself started evolving from 2000 onwards. It was earlier called as clustered charts, and later on people called as a footprint charts, order flow charts. It has different names. It was initially started from a software called Sierra Charts, and then Market Delta, and then later on adopted by Ninja Trader and Ninja Trader partners. And BellTPO is one of the biggest partner of Ninja Trader, right? And and I thank you, Vinod, for giving me this opportunity to talk to BellTPO family members. Let me try to explain what an order flow is all about, if in case if you haven't seen order flow, right? It is not an yet another indicator. It is neither a lagging indicator. It is neither a leading indicator. It's a tool which talks about in real time how the buy market orders and sell market orders are entering into the markets. It's trying to explain who is buying, who is selling, or in other words, it shows the details which the candlestick charts doesn't show those information. More dimensional information it try to show. It shows how aggressive the participants are at each and every candle, how the participants are aggressive. And it also brings, or it also try to explain which auction is succeeding, which auction is not succeeding. Because end of the day, right, price is the result and order flow is the cause. Of course, you would have learned this in price action analysis. If you would have learned that, like this one of the very interesting cause and result, or effort versus result. Now, what actually moves the price at a very fundamental level? If you ask me, it's not the indicators. It's only the at a very fundamental level, right? Like how our human body is made up of cells. At a very fundamental level, a small uprise is happening because of buy market orders are pushing the price up, and sell market orders pushes the price down at a very fundamental level, right? So buy market orders we called as an aggressive orders, sell market orders we called as a aggressive selling orders. At any given point in time, we'll be having an aggressive buyer also, aggressive seller also. Who is more aggressive, markets moves in that direction. So as you know, right, primarily we have only two major type of orders. Exchange understands only two type of orders: market order or limit orders. We have a lot of variations: stop loss limit order, stop loss orders, bracket order, cover order, but still they are nothing but, again, they are just variations of market order and limit order at a very fundamental level. At a very fundamental level, there are only two orders. You go to any exchange, right? You call it as an aftermarket orders, GTT orders, or whatever it is. At a fundamental level, there are only two orders, market and limit orders. Market orders, they are very aggressive, means they go and chase the price action, they create the price action. If you're seeing the price action in the sudden drop in Bitcoin or sudden shoot in Nifty, probably a Monday, possibly a gap up because there is going to be a news-based announcement, right? Because Supreme Court in US said that Trump tariff is illegal, right? So there is going to be a big gap up. So everything is caused because of there is a market order is involved there, right? A big gap up, big gap down, sudden intraday drop, or slow, steady price action. Any price action that you are witnessing, it is caused by the market orders. Okay, then if you ask me what is limit order on the other side, they are like passive orders. They don't move the markets. They just sits at the price. It wait for the price to come and touch. It wait for the fill, in other words. But institutions uses limit order a lot. That's why using order flow, right? You can clearly understand what institutions are trying to do many a times. And there are many smart trade locations. You can identify trend reversal because you understand certain concepts like absorption or delta positioning, those kind of concepts, or trapped buyer, trapped seller. So you can understand how smart these limit orders are, because 80% of the orders, majority of the orders are, let it be an high frequency trading orders, or even majority of the algo trading orders. Going forward, I think SEBI says like an algo trading, right? Algo traders cannot send a market order, they can send a limit order, right? Majority of the algo orders in the markets are limit orders, by the way. They don't move the markets, but they can absorb the pressure in the markets. They can provide liquidity to the markets, right? So buy limit order, they wait on the bid side, and sell limit order, they wait on the ask side, which you can eventually see it in the order book. Probably would have seen this in your broker tool, right? So this is called as level 2. Broker generally provides up to 5 depth. There are some brokers, they provide up to 20 depth. There are some brokers, they provide up to 30 depth. And some brokers, they are even providing up to 50 depth. And some brokers, even they are going extra mile, they are providing up to like 100 depth and 200 depth. Like we have all kinds of crazy Indian brokers nowadays. And yeah, that's been a great adoption in technology. I think very going forward, right? A lot of very interesting things will be happening in the Indian order flow. There are other side a lot of restriction from SEBI as well because of the SEBI's action. Recently, there is a huge liquidity drop in Nifty and Bank Nifty. So this has been happening for the last 1 year. Previously, Nifty and Bank Nifty, we had a crazy amount of liquidity was there. The order book is completely filled. Every second, huge amount of volume happens. But off late, you know, right? So SEBI is going against all the option trading community, and the volumes has been dropping. Recently, there is a crackdown on prop trading as well. Anyways, a lot of things are happening. The concept is order book shows only pending limit orders. Means it is not going to move the price action at all. It's not going to move the price action at all, but it can control the price action, can control the velocity of the price action. That is why institution uses it to control, to create real-time resistance. Whenever they want to create a resistance, they can create a resistance. Or whenever they want to create a support zone, they can create support zones in the form of floating continuous limit orders, right? They'll keep on sending limit orders. Thereby, they can control the velocity of the price action. I hope you guys are able to understand me. If you're able to understand, please type yes, so that I'll get an idea that because many series, right, I'll be keep on going on talking in a sequence. Okay, great. So Guru says yes, Sudhir says yes, Savita says yes, Rakshit says yes. How about others? I hope my voice is clear, right? All right, great. Thank you. Thank you, Rakshit and everyone. So, but there are two different things. If you understand the order book, the bid side, which is nothing but the buy limit orders, will be on the left hand side, and the ask side, which is nothing but a sell limit order, will be on the right hand side. But if you look into the footprint charts or order flow charts, right, you can clearly see that the it shows the market order. It shows only the executed market orders, whereas order book shows pending limit orders, right? Whereas order flow shows only executed transaction, completed transaction price is changed, and that volume is shown at each and every price level. It's shown at each and every price level so that you can see like, oh, this price level, so many lots got traded. Now, some tool might show us in terms of number of volumes mostly. That is very difficult to read because you have to read like 5-digit numbers or 6-digit numbers sometimes, which is crazy to read. But whereas I have a habit of looking into in terms of number of lot size, right? If I can show you a sample how the chart looks like, actual Nifty chart looks like. So it's very simple. On the order flow, right hand side will be having an executed market orders and buy market orders, and left hand side will be having a executed sell orders. So this shows that where the buyers are aggressive, where the sellers are aggressive. For example, you can say like 720 here, 680 here. These are the locations, these are the price levels where the buyers are more aggressive, and on the sell side I can see where the sellers are aggressive. It shows how intensive the traders are. I can feel the markets, in other words, right? So there are many people say like you can feel the pulse of the market, right? Order flow, if you study order flow, that's a real pulse of the markets. So at each and every price level, you can see at a bin level, I mean, you can slice it into multiple pieces. Each and every level, you can see how the trading is happening at each and every price level. So here is the chart of order flow, how it looks like. It is in lot size. The numbers are in lot size, by the way, so that it's pretty easy to read. So that I can understand very easily where the big volumes are getting traded, where the smaller volumes are getting traded. You can see like this block over here. I can see where the big volume is happening, right? And I can see where the momentum is happening over here, right? So there's a sequence of momentum. You can see like the colored bars over here, which is what we call as a bid and ask imbalance, which I'll be talking about it in the upcoming slides, right? You can see an VWAP levels. You can see some table columns at the bottom. So that shows different metrics about order flow. A lot of metrics you can keep, but I prefer to keep it minimal, right? I don't, there are different type of trader have different metrics, but I prefer to keep primarily delta, cumulative delta, and the volume. These are my primary studies which I try to keep. But the tool is not only just built for me. BellTPO had built for many people. So different type of people, they like to have different metrics. So whichever metrics which is of your favorite, you can keep it. And likewise, there are different varieties of modes they are having. I'm not going to look into all the modes because we have very limited time to talk about that. But the mode which I like the most is bid and ask imbalance. Probably many charting tool, you might be seeing this bid and ask imbalance or bid and ask histogram or bid and ask charts. Something like this is what you might be primarily seen in many charts. But I prefer to look into the imbalance type, which is clean, neat, and easy to understand what is actually happening when the live market is going on, right? And last Friday, in fact, you can also see like there are some sort of an cumulative delta has been keep on rising, and that says like some sort of institutional activity also happening on the buying side. Some smart money came and bought on last Friday. By any means, we can consider that as a not a news base because news got released only during midnight only Friday night. If, as you know, what is the news is all about? The news is like Trump. I mean, the Supreme Court says like the U.S. Supreme Court says that uh, probably that U.S. tariff is illegal, so he cannot put tariff on various countries. So that is the news. I don't know how the market is going to react. Hopefully positive, at least at the opening. Later on, we get to know how the market is going to react later on. But the cumulative delta shows there has been some sort of an institutional buying happening, or maybe institutional short covering is happening. We don't know really. Um, but one thing we know that institutional activity happened. Some institutions closed their shorts. Some institutions would have bought so in a very smart way. So a lot of many things, a footprint charts can bring you many details about it. It can show you where the stop loss hunting is happening. It can also show you where the absorption is happening, or where the delta packet positioning is happening, or where the stack imbalance is happening, or where the volume cluster is happening. Almost close to close, we have like 16 order flow principles and order flow strategies around that, where the zero zones are happening. In fact, zero zones are very potential trading setups. In our upcoming chapter, the part 2 series will be discussing about various trading techniques as well going forward. So Guru is asking, wondering which broker provides full depth level 2 data. See, level 2 is only 5 depth only. There are a couple of brokers who are providing level 3 data and TBT data. You can just search it out, right? I also had written a lot of articles about brokers providing TBT data. And you just search for TBT market calls, level 3 data, market calls. You will get to know about which brokers are providing what, right? And Dattatreya is saying Hindi, please. So maybe in a different series, we'll try to have an Hindi session. This is going to be more for everyone, right? All right, let's move a little forward. At the fundamental level, let's say I'm a trader. I'm sending in Reliance 100 quantity of shares, what I'm going to send up. You know what will happen? What will happen is the 100 quantity goes to the order book and it takes the quantity from the order book. So I'm a buyer, right? I will engage with the seller. I'm a buyer, so I'll engage with seller. It's like kind of an exchange is like kind of an bharatmatrimony.com. Like the market order always marry with limit order, and a limit order always with a marry with an market order. Market order and market order cannot match. Limit order and limit order can match under certain situation only if they're crossing the bid and ask, which is very rare. Mostly in a traditional logical way, a market order, if you're going to place, it always engages with the limit order, right? So market order always get married with the limit orders always. That's how the exchange works. Market order will be matched against the order book. So here you can see that the trader is sending 100 quantity. So it is going and getting 60 quantity from there, and then the 90 quantity from there. So the trader is the one who's pushing the price from 1420 to 1420.10. So the new last traded price updates, and after execution, this is before execution. After the execution, the limit order book looks something like this. You can see like the 60 quantity has been consumed, that's zerofied, and the remaining 90 quantity here, 40 has been consumed, and the remaining 50 order remains. And you see a small uptick in price because I had placed 100 quantity of Reliance in the markets, right? So here, what is happening here? Here, who is moving the market? Is the limit order is moving the market, or the market order is moving the market? Who is the cause of the price action? Who is the creator of the price action? Market order or a limit order? I just want you guys to participate and then reply so that I can get a fair idea. Market order, right? Absolutely, yes. So what is actually happening is market order is taking the liquidity from the market. That's the official term we'll use. So when I say liquidity, liquidity means limit orders. So market order takes liquidity, market order consumes liquidity. Whereas if I am submitting a limit order, let's say I'm a retail trader, I'm submitting 100 quantity of limit order at 1419. Before you can see that I'm just submitting my limit order. At that second, this is how my order book looks like before submitting my order. But once my order is submitted, my 100 quantity will get added, but still my LTP remains. In the meantime, if there is no trade is happening, I'm just only sending my limit order, right? At that instant, if you just take a camera and then photograph the order book, this is how it looks like. So the order book will be showing the quantity, my 100 quantity will get added up. So my 140 will become 240 over here because my my new quantity got added up over here, right? So limit order, what actually happens? It still waits. It doesn't changes the LTP, but still it goes and sits. So you can say like it. I'm adding more to the liquidity. That's what we can say, like, right? I'm not consuming the liquidity, but as a limit order, I'm supplying liquidity to the markets. And here comes the most important part: initiative drive. Initiative drive is one form of an institutional price action. There are two ways institutions tend to make. One is, maybe I'll try to summarize the list of ways you can find the price action. So order flow classifies price action into three different categories. Let me try to bring a drawing board here. Oops. Yeah. So different types of price action is what we're going to learn about over here. And this is in terms of, not in terms of the actual price action, but in terms of price action in terms of order flow types. In terms of order flow, one is initiative drive. The second one is what we call as an absorption. And third one is what we call as a consolidation. So these are the three important price action type, and the initiative drive and absorption is primarily from institutions. It's one way to figure out that institutions are there in the markets. So when I say institution, you cannot bifurcate whether the order is coming from FIs or DIs, right? Of course, both are these days equally powerful. And of course, last couple of years, you can see that the DIs are having upper hand. FIs keep on selling, DIs keep on buying, markets are not going anywhere. Right? It's kind of a big tug of war is happening in the markets, right? So all the panic selling is observed. Even a couple of days back, Iran tensions was there, and order flow was going crazy at the opening, but then market restored its normalcy, right? I mean, the February series, it's itself kind of crazy thing, right? If you would have seen that, we are not going anywhere. We are at the same place only throughout the series. I don't know how you felt like it was a regular month, but a lot of sideways, choppy price action. But if you would have seen in the intraday order flow, you would have seen a lot of potential price actions. You would have seen, right? A crazy order flow you would have seen throughout the series. So initiative drive is one form of an institutional price action where one-sided huge volume activity will be there. Not huge as in the figure, but imagine like you can very easily spot some big price actions will be there, powerful trending markets will be happening, volumes will be bigger, and you can feel the markets that the market is really trending intraday, right? So volume will be expanding. Maybe sell side volumes will be pretty less, buy side volumes will be crazily higher. That's what it's an initiative buying is all about. Initiative selling will be on the other side. You can find like crazy selling volumes, and buy volumes will be lesser on the other side. Or maybe buying momentum will be very higher, and the selling momentum for the selling initiative drive will be very higher on the sell side, right? So initiative drive is one form of an institutional participation. This is where professional traders, they execute their price action very easily. You can able to spot using order flow tools, not using candlestick charts. Candlestick charts we can only guess, but in order flow we can confirm it, right? And there's also another form of absorption. I mean, more than initiative drive, right? You can find absorption based setups a lot in the markets very frequently. Almost on a daily basis, you will be able to find absorption at various points. mostly near the highs or near the lows, or fresh highs, fresh lows, or sometimes even at intermediate highs, intermediate lows. So these are the places order will be very aggressive. Order will be aggressive, not the price, right? Order will be aggressive, but the price will get absorbed. So these are the area of resistance or area of support zone. If you're seeing that buyers are being absorbed, means the sellers, sell limit orders are taking control of the market. You can see that this is like huge buying volume activity, but despite that, it makes a top. Despite that, market reverses from here, and absorption will be looking something like that. The difference between initiative drive and absorption is very simple. If I talk about initiative drive, it will be more of an pointed price action, with big volume activity. If you would have seen that, it'll be like it'll be having like big flow, big volume flow, mostly institutional, right? And institutional, and you'll be having a pointed price action, kind of one-time framing sort of point of price action. Of course, those who know market profile, they know what a one-time framing is all about. And if it is an absorption activity, let's think about an absorption for a moment. It's like kind of an area of resistance. So something like this. Let's say we're having an area of resistance. It got built around this area of resistance. So when the price is nearing the zone, imagine the price is nearing the zone and the price will go sideways, or even better, they will even tend to turn around those zone, because there will be a continuous flow of sell limit orders will be floating in that zone. I would say like it's more of an crazy amount of continuous limit orders will be kept on floating in this zone, which will not allow the market orders to cross this zone. So there will be a continuous flow of limit orders, right? That's what kind of limit orders it is? Buy limit orders or sell limit orders? What do you guys think? What kind of limit orders are likely to be floated? Like, think about like a river. Imagine a continuous flow of river is happening. So what kind of limit orders would be floated over there? Sell limit orders, right? Yes, of course, you're right, Guru and Savita and everyone. So it's a continuous flow of limit orders. The continuous flow of limit orders, because they're not going to send once, they can keep on pumping multiple times so that they can control the location. They control the location so that the buyers will struggle to cross. If at all the buyers have to outsmart the sellers, they have to come up with more volumes than the sellers, but the sellers comes up with unlimited supply, because they are institutions. Because they are institutions, they have a huge muscle power to control the markets, right? So they are the one who creates absorption. And very easily you can understand absorption concept. Probably in our upcoming chapters we'll be talking about absorption a lot, but for time being, understand that despite huge volume activity, the absorption tend to happen, right? So absorption can happen. Sometimes an absorption can happen with on both the sides, right? So like kind of an buy side and sell side, the orders will be close to close, a very bigger volume activity. So that's why the absorption happens, and market takes a U-shape reversal, right? So a clean trend reversal is what you can able to find. And delta, the most important concept, the most misunderstood concept from the beginners as well. Many beginners, they look into the delta, big positive delta, big negative delta, and they start speculating into the markets. But let me try to give an explainer what a delta is all about. So, okay, I can understand from the candlestick charts and order flow charts that order flow, I can see how much buy volume is happening or sell volume is happening. But how I can evaluate how aggressive the candle is, like who is controlling the candle, whether buyers are controlling the candle or sellers are controlling the candle. So if you ask me, so delta is one way we figure out that. I'll add up all the buy side activity in the candle. I add up all the sell side activity, or in another words, we can also do side by side as well. So like 610 minus 420 is 1 plus 190. Likewise, I keep on doing this, and I add up all the value. I'll get 360. Or you can also do in another way: add up all the buy side lots, add the sell side lots. Total buy market orders minus total sell market orders, which is like 3360 minus 3000. The net delta is nothing but 360 plus 360. So what does that means is that particular candle, buyers are more compared to the sellers. How much more? 360 more, right? That's what it means. So means that candle, buyers are more aggressive. The candle may end up positive or negative. That's a next thing that we have to worry about that, right? A positive delta doesn't mean like positive candle. Please be aware that this is where beginner level trader, they make a mistake. They study the theory and then they go and sit in the live markets and they find completely different. They will be scratching their head and then they'll try to understand why the candle is positive and then delta is going negative. What does that really means, right? Let me try to give an explainer for that, right? So there are many times in the markets you're going to see a positive delta, but price is going to go sideways. There are many times you'll be seeing a positive delta. From there, it could create something like a kind of a delta divergence, right? So as a beginner, what you should not do is like positive delta means market will go up, negative delta means market will come down. These kind of assumption you should not take, because all four kinds of scenarios can happen. Positive delta, market can go sideways. Negative delta, price can go sideways. Positive delta, still market can go down. Negative delta, still price can go up. Or there are many strong pointed price action. Many times, strong trending markets, I agree that strong buying pressure will be there and strong selling pressure will be there. For example, last Friday's market, or even last Thursday's market also. Last Thursday market, what happened? You guys should be watching the markets, right? Last Thursday, there has been a pointed downtrending markets. On that day, let me remove the lines. These are some of the lines that I used to draw. If you would have seen that there are many delta. So you see the candles are delta, right? Negative delta is there. That shows the negative candles. The day started with a positive delta. As you can see, like the day started with a positive delta and positive delta. Positive delta doesn't means like market has to keep on going up, right? So delta started getting negative. You can see like negative delta over here continuously, negative delta, and more negative delta started coming in, more and more bigger negative delta start coming in. The day was throughout the day, it was a news-based selling pressure was there, because since the morning the tension was there, like US and Iran tensions has been flared up, and markets also took that news-based selling pressure. It's not an institutional selling pressure. There's always a difference between news-based selling pressure and institutional selling pressure, right? So if you know that, if you are in the market very routinely, you know that this is a news-based selling pressure. Yes, the intensity of the volume is very high, but this is not smart money coming and selling in the market. This is more of a news-based selling pressure in the market. And that too, if you can see, like a lot of huge panic is there in the last 45 minutes of section. Continuously, every single level is like continuous selling pressure, right? That's a complete news-based selling pressure is happening in the markets. Looking at the delta as well, you can see like the numbers are not smaller delta, minus 1161, minus 1329, and minus 649, and minus 871. Continuous stream of negative delta. In fact, the cumulative delta, if you had seen like minus 12K is the 12.6K is what the negative cumulative delta is all about. Market was keep on going down in a one way. Panic was there. Even many people ask, like, is that a bloodbath, right? I said, like, boss, that's only 1.3% or 1.3, right? Approximately some 1.3% of price action crash it is. I mean, how we can call it as a crash, right? Maybe market can go sideways. I'm not very sure. But this is something, it's more of a news-based selling pressure, right? At the same time, if you would have seen the other day, I mean, the very subsequent day, the Friday, you would have seen a lot of buying activity has been keep on happening despite all the tensions. Right? The market knows something. There is no news there this particular day. There is no news. In fact, a lot of negative news was getting carry forwarded. A lot of AI based tensions was there. AI conference has also keep on happening. And on another side, right? You can see like huge blocks of buying volume is also happening. This happens in a serious trending markets. But in a sideways markets, if you have seen that when the market is going sideways, so this block of sideways, what you are seeing here, right? This block of sideways, what you're seeing, you will be seeing a mix of positive and negative activity. There are times you'll be having, and look at this candle here, a positive candle, but still the activity is negative. Right? There is a small selling pressure is there. This candle here again, positive delta, but still candle is going down. So what does that means? So there are times positive delta and price can go sideways. So what does that mean is price is not moving higher, but means the buyers are being absorbed in the markets. Other times negative delta is there where you'll be seeing like sellers are being absorbed in the markets. There are times you'll be seeing like completely positive delta, but price tend to go down completely. It keep going down. So buyers are aggressive, but still price falling. This is something which happens at absorption, right? Absorption, it happens. Buyers are getting trapped. Trapped activity happens in the markets. It's not like only the delta players are smart, right? So when there are times at special locations, you'll be finding that the buyers are getting trapped, sellers are getting trapped, and you very quickly, if you are using order flow, very quickly you realize that that's a trading opportunity, right? So Dattatreya Jadhav is asking how to find it as institutional selling or news-based selling. See, number one, you have to be in the markets continuously to understand what is the news flow is happening in the markets. That is very, very important because looking into the charts alone, you cannot say whether it is institutional selling or news-based selling. Number two, we use cumulative delta to figure out whether it is institutional selling or not. If it is institutional selling, if the numbers are really bigger, right, or it is number keeps on growing right from the start of the day, and we also check what kind of news factor come in that particular day. If there is no news factor, obviously it's an institutional day. If it is something like budget day, maybe it can be institutions. But if it is something like an fear, like war tension, something like that is happening, and people are coming and flooding, it's mostly a panic based news driven selling. It is mostly, right? That's how we identify institutional selling, not just from the charts, but context wise also we'll try to look into the markets. We just don't focus narrowly on the charts alone. All right, so cumulative delta, again, as I said, like the most important thing to figure out whether an institutional activity is happening or not, right? It's nothing but cumulative delta measures the running total of the delta for a trading sessions. So it overall, it try to explain who, I mean, or in other words, like is buyer or seller is controlling the overall day, right? So if you had seen that this particular day, I mean, the last Friday session, overall, the overall cumulative delta is 10,821 is the cumulative delta. What does that means is on that particular day, there are 10,821 lots of buy market orders has been sent more than the sell market orders. Total throughout the day, you calculate all the total buy market orders sent in Nifty futures and all sell market orders sent for in the Nifty future right from the morning till 3:30. You take the net delta, the total value is 10,821, which is by any means it's a significant number. So what does that means is a huge institutional activity is brewing in the markets. Right? Usually institutions, they don't try to move the markets on a daily basis. But very few cases you'll be finding this kind of institutional activity will be keep on happening in the markets. And very interesting things to learn that what institutions are trying to do in the markets, right? how cumulative delta is calculated. At the start of the day, cumulative delta always starts at 0, delta also 0, and at the end of the 5-minute candle, right? The candle, if you are using a 5-minute candle, I use 5-minute candle a lot, and off late we are using a strategy called dynamic intraday volatility switching strategy. So based on that, we'll be dynamically selecting 5-minute candles or 3-minute candles or even 1-minute candle. That depends upon how much volatility or how much implied volatility is there in the markets. So we'll be looking into IV percentile, and then we'll be switching the same strategies, but we'll be using a different candlestick blocks. So that's the kind of things that we practiced during the budget session also. We moved from 5 minutes to 3 minutes, and even from 3 minutes to 1 minute because of the IV percentile jumps. So we used accordingly. We used cumulative delta as well. So cumulative delta plays a larger role in determining an institutional activity, as we talked about that, right? So every delta activity will be cumulatively summed up, and final value is what you're going to see over. If the number reads around 940, it says like 550. What does that mean? That at that instant, there are 550 buyers more than the sellers since the start of the day, right? That's what it means. So if you are seeing rising cumulative delta, that means buyers are in control. Falling cumulative delta, that means sellers are in control. Sometimes, not sometimes, most of the times, you'll be having a flat cumulative delta only. Like you'll not be finding any crazy cumulative delta on a daily basis unless there is some sort of an institutional activity is there. Only if an institutional activity is there, you'll be finding like cumulative delta will be keep on rising, or if there is a strong fear is there, VIX will be rising crazily, then also you'll be finding strong institutional activity, or or VIX is rising along with that. Cumulative delta also rising. That is more of a fear-based selling is there in the market, or news-based selling is there in the markets. A small promo here. We are starting Trade Edge 10.0 in our April batch. Our previous batch, almost Trade Edge 9.0 done at Feb 2026, right? It's been an 84 plus hours of live mentoring sessions, which we talk about extensively about market profile, order flow, and volume spread analysis. A lot of complex concepts in market profile and order flow, which we try to break down into simpler nuances, easy to understand. A lot of whiteboard sessions, a lot of explainer content is what we try to bring, more realistic content, right? And a lot of live sessions to make you understand how to understand the intraday nuances, more from the market profile and order flow perspective. And volume spread analysis, probably I would say like 10% of the content is from VSA, and market profile is like 60% of the content, and 30% of the content is from the order flow, right? So, and more content this time we are planning to add from the execution perspective, from the risk management perspective, and also trading psychology and discipline perspective as well. Primarily we cover Nifty, Bank Nifty, and mostly top liquid Nifty 50 stocks is what we try to cover. So if you want more details, you can go and get the details from learn.marketcalls.in, right? And I hope your journey from retail trader to be professional trader will be guaranteed in Trade Edge 10.0. Let me move on very quickly. So generally, when we try to compare, right, you can compare side by side also, you can compare diagonally also, but when it comes to momentum, right, only when it comes to momentum, we try to compare diagonally. So whenever we try to compare diagonally, if it is more than 5 times, I prefer to use 5 times, but otherwise you can control the settings from Bell order flow. If you go to Bell order flow, right, you can control the bid and ask imbalance. You see this red color blocks, right? They are like imbalances on the sell side, or if you are seeing on the green ones, they are nothing but the buy side imbalances. And that is more of a softer control. You can control it like 5 times imbalance. So this exact imbalance is what it shows how much aggressive the traders are. There are various ways you can find traders are aggressive or not. One another way we try to find traders are aggressive is like whether it is a buy side imbalance, more buy side imbalance. You're gonna see sometimes there'll be algos will be running in the markets. One form of algos is like kind of an market sweeping algorithms that will be running in the markets. When such kind of algorithms are running in the market, you'll be seeing a huge order flow imbalance in one shot, right? So the market will orders will be completely scoring the liquidity, completely it will be eating all the complete liquidity in the order book, right? And you'll be finding like huge imbalance will be happening in the markets. That place you can figure out that that's not a normal trading. Mostly some sort of an algorithmic trading is going on there. Some big institutions are coming and pumping up the market orders, and they are pumping the markets up, right? So those kind of things you'll be able to figure out. And if you are seeing these kind of bid and ask imbalance, that is also one form of an initiative activity, right? And we call it a stacked imbalance, particularly if I am going to see three continuous diagonal imbalances at any given point in time, right? So three continuous imbalances, whenever I'm gonna try to see, it is going to bring more of an potential trading opportunity from the intraday perspective. So stacked imbalances are very powerful setups, and it can these like we can draw this like kind of a zones so that you can use that to play the breakout or breakdown kind of setups. Stacked imbalance strategies are very powerful setups, particularly in a lower time frames like 3-minute charts, right? So three or more, sometimes you will be finding more diagonal imbalances also. Sometimes the diagonal imbalances also brings one form of a positioning in the markets, right? So kind of an institutional positioning, sometimes in the form of delta packet positioning. So the stacked imbalances itself, it has a lot of stories behind that. And it is always part of initiative buying and initiative selling, right? So momentum activity, definitely one form of imbalance. Tagged momentum activity, some form of imbalance. At times it could be one form of a positioning in the markets from the institutions as well. So single balance is like short-term pressure, but stacked imbalance is like sustained initiative. Yeah, that's true to a larger degree. And I think these are some of the basic concepts, but in our upcoming chapters, right, what if you ask me what is the glimpse is all about, in part 2 is all about how to understand order flow principle and how to convert that into a strategy. We'll be talking about 2 to 3 strategies we'll be talking about in our upcoming chapters, which you can readily go and apply in your upcoming I mean, if you are using order flow, you can readily go and apply on day 1 onwards. One thing what I like about order flow is like completely objective. There is no subjective mechanism over here. You see the data and you trade the real time, right? There is no thinking like, oh, it's completely pure visual rule based, right? And pure mechanically driven strategies. You know that this is a stop loss. And one important thing is like the most important thing I like the most about order flow is like you have a very tight stop loss majority of the time. And recently, as I said, like we've been moved to dynamic intraday time frame switching strategy, right? So we do that to reduce the risk in the order flow. Earlier, we used to have a 5-minute time frame a lot, but going forward, we switch dynamically, systematically. We switch from 5-minute to 3-minute, 3-minute to 1 minute, 1 minute to even 15 seconds. But everything is completely rule-based approach is what we adopted, so that the risk will be always defended. Something like 20 to 30 point risk in case of Nifty, whereas Bank Nifty primarily the risk will be around 50 to 80 points, right? In any given point in trade, it could be even more lesser, but not it cannot go beyond that. And that is one thing that I like order flow the most, right? So Guru is asking, can you explain imbalance and stacked imbalance using the bid and ask imbalance charts? of course. So bid and ask imbalance can happen. Stacked imbalance, I don't think it's, yeah, you can see over here, like that's a stacked imbalance, like 258, 539, and 278, right? That's a kind of a crazy stacked imbalance over here. But remember, not every stack imbalance is a trading opportunity. There are specific trading imbalance. Different time frames is what I do use. I don't use stacked imbalance on a 5-minute time frame. Maybe at the opening of the candle I use, but not during the intermediate levels. 3-minute charts, we have specific strategies on stacked imbalance. This is like kind of a great imbalance over here. Continuously 3 blocks of activities happening over here. As you can zoom and then I can show. It's like stacked imbalance. Where else we can see? So this is only, if you could see here, imbalance is there. Both buy side also imbalance. 73 is there, 53 is there, 145 is there. So you see that 6 and 145, this is more than 5 times bigger. 7 and 53, more than 5 times. And 11 and 73, more than 5 times, right? But still, we don't consider that as a stacked imbalance because they are not continuously together. Whereas this one here is continuously close to close each other. That is a crazy imbalance. This is imbalance again, 41, 0, 43, and 10. If it is any zeros incoming, we generally skip those things. It is more of an imbalance or a sell side imbalances here. But if you could see that throughout this block, you are seeing like a lot of sell side imbalances there and little buy side imbalance. That is also one form of an strong selling pressure which is happening in the markets. Delta is also minus 822, big negative delta. So that means that that candle is having huge selling pressure is there in the markets, right? So one is imbalance and the delta combined together, it shows how impactful the candle is, right? Or what location the sellers are keep coming in, like how powerful the sellers are compared to the buy side. Buy side, literally nobody was there. Sell side also not much, but still slightly intensive sellers are there. Aggressively, they are able to push it down, even with a little volume activity, right? Not so crazy volume activity, not like 500, 600, 700 kind of lots, but still they are able to push down like 60 points. They are able to push it down, right? And yeah, so the selling intensity was there, little higher here. This is when? This is like last Friday activity. So last couple of minutes, there has been like some selling pressure was there, and then last 15 minutes got stable. But then there has been some selling pressure was there. All right. So there is a question from Rakshit. So the sell side will be something like this. I mean, the buy side will be imbalance will be like this, and sell side will be something like this. Maybe the second slide was like slightly there was a mismatch, but this is how the imbalance has to be measured. Always it is from left to right diagonal is what you have to compare for the buy side imbalance and also for the sell side imbalance. Rakshit is having a question. Quick question: as a beginner to order flow, what would you suggest to see the order flow chart? Is it 400 range or normal 5-minute chart? So as a beginner, I would say like you should start looking into 5-minute charts and slowly you get adapted to 3-minute chart. Only if you have a frequent eyes, you've seen that flow of markets at least for a month using time frame based charts, only then you should get into the range bar charts. Right? Directly getting into range bar charts is not a good idea. Right? Some people it may work, it may not work, but 5-minute chart is the best battleground to test your ideas. 5-minute and 3-minute charts. Later on, more you're gonna get an expertise, more you understand about a particular. Let's say you're watching Nifty for like 3 months or 6 months in a row, and now you gain more confidence. You know how the 3-minute chart works, how the 5-minute chart works. Uh, you want more noise reduction, then only you should go for range bar charts. Directly getting into a range bar chart is not a great idea. It's a good tactics to reduce noise, but it's not a good practice to straight away jumping into a range bar chart unless you don't know the real volume flow which is happening. I guess I thank you everyone for being part of the session, and thanks for your time to spending your wonderful Saturday along with us today. And see you soon in the part 2 series. More interesting content is coming up. See you in our upcoming chapters. Thank you.